Good morning. Wednesday, April 2nd, 2025. Zach Howard. Here's your 3-minute morning market update. From the notebook yesterday, stagflation is the theme continued. April, May here in the US. This data really starting to confirm that thesis as you line up with buying yields, gold, and other global asset prices. Let's check it out here. We got ISM manufacturing prices moving a lot higher. That's the highest number recorded since July 2022. So rising prices with slowing PMIs below 50. That's contraction in the manufacturing sector. Along up here with Canada, slowing growth with rising prices. That is your definition of stagflation. A big lower low here down in the ISM manufacturing new orders. Forward leading indicator here 45 versus previous 48. Big rate of change slowdown. Atlanta Fed pricing a negative 3.71% Q1 GDP to be reported. Yikes. Over to Canada, just talked about slowing growth there, and that gets reflected. We look through bond yields in the Canadian 5-year government bond. The one probably most keen to pay attention to as it relates to mortgages in Canada. Mortgages on the fixed rate are priced off what that 5-year government of Canada bond is doing. And here in 2025, there's 1.2 million Canadian mortgages that are coming up for renewal that were booked 5 years ago when Tiff McCallum and all the Bank of Canada said, don't worry about rates going up. Back then, the Bank of Canada rate was 1%. So people got a big jump on the renewals that's coming. Rates have to come down. And the easing of the Bank of Canada is going to happen, is going to continue, as is seen here in the bond yield. The bond yield is the leading indicator, not what the central bankers at the Bank of Canada are saying. And more easing is ahead. What is the relief valve? It is always the currency, the fiat currency that can be created at will, that is not tied to anything. The Canadian dollar is going to continue to weaker from a real standpoint, a real purchasing power, what that buys you, goods and services, loaves of bread, putting gas in your car, buying a home. All that is going to get tougher in this backdrop where that currency continues to weaken. Looking at the price of gold here, it's up 45% in Canadian dollars. Forget the US dollar. This chart looks like Japanese yen price of gold going to $4,500 an ounce over the last year. Zooming out, look at the damage since we've had this liberal government here in charge of the Canadian country, one of the biggest companies in the world, if you look at it from that standpoint, what the country is. And this shows the debasement of the currency over the last 5 years. Incredible, 85% price of Canadian gold per ounce. What's the price of volatility in an unknown event, an event that hasn't happened, and you can't price what the implications are because we don't have a backtrack for back testing it. Well, that's what's going to play out here in this Liberation Day. I think the market is very at ease as once the announcement is here this afternoon, we're on to the next. But like, what are the repercussions of all this? And I think there's a lot of complacency out there. If you look at safe haven trades, like those low volatility treasuries and fixed income products, utilities, and particularly gold, that's all saying risk off tones will continue. That's what I see here today. Have a great day. One last thing. You're always going to pay more tuition in life. I had a pretty humiliating humility moment yesterday, and it comes to markets. There's always humility if you don't have ability. Check your sizing, check your process, and check all the things you use to make decisions. Have gratitude. Have a good day. We'll see you tomorrow.